In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, special counsel Robert Mueller leaves U.S. citizens with a foreboding warning about systematic efforts to interfere in the 2016 U.S. elections, and tech was their weapon. How well prepared are we to prevent it from happening again? Plus, American companies are rushing to boost the supply of rare earths as Beijing gears up to block supplies to the United States. How these minerals are critical in the building of smartphones, electric cars, and more. And it's been a rocky few weeks for Uber since its IPO. With its first public earnings report coming up, we'll tell you what investors are watching. But first, to our top story, U.S. Special Counsel Robert Mueller breaks his silence about the Russia investigation. Perhaps the most telling statement. He said if he and other investigators had confidence the president clearly did not commit a crime, they would have said so. Before stepping away from the podium, Mueller did have one last important message about Russian interference in the 2016 election via social media.
And I will close by reiterating the central allegation of our indictments, that there were multiple, systematic efforts to interfere in our election. And that allegation deserves the attention of every American.
Joining us to discuss in Dallas, Jason Casey, Chief Technology Officer of Security Scorecard, a company that intercepts threats across various kinds of organizations, and also with us, Bloomberg Shannon Pettypiece in Washington. So Shannon, of course, we know there was interference, foreign interference in the 2016 election, though the president and others in the administration have downplayed it. What is the reaction in Washington today to Mueller underlining that very point before he stepped away from the podium?
Yeah, I mean, that's right, Emily. There wasn't much new in this press conference. He basically gave a 5-minute or so summary of his report. But the visuals and hearing it directly from him, I think, has really sort of shaken things up in Washington, especially among Democrats. We've seen really sort of a renewed call or an increased call from Democrats to begin impeachment hearings. And I think that just the visual that you can now play on TV, on Bloomberg TV, on cable news, on the evening news, of Mueller in his own words saying these things, saying if the president didn't commit a crime, if I had confidence in that, I would say so, saying he was bound by Justice Department rules not to indict a sitting president. So it was something he couldn't even consider. And again, using this platform to remind people that despite what the president has said about this investigation being a hoax and a witch hunt and some sort of politically motivated, action here, that it was at the core about Russian interference in our election and trying to raise that issue again and questions about how prepared we are. So I think that, while there wasn't a lot of news here, it is making waves in Washington, and I think it is going to get Democrats sort of catalyzing around the I word, impeachment here.
So let's take a look at that core, Jason. Facebook just took down another bunch of accounts that were tied actually to Iran, not Russia. However, the social network and other big tech companies have tried to make various changes to prevent these things from happening again. But even they have said it's an arms race. It's hard to keep up. So how well prepared are we from preventing the kind of interference we saw in 2016 from happening in the upcoming elections?
Sure. So there really are two parts to what was going on before. One is the targeted hacking and extraction of information. And second was using these social media platforms as an amplifier to kind of distribute the disinformation. What we typically find is larger organizations are better prepared than smaller organizations to defend against that first part, the extraction of information. Where things don't seem to be going that great is how do we get in front and flag disinformation faster and prevent the amplification in social media from really taking to effect, right? Because there really are those two key points, right? An organization can run better defense and prevent episodes like what happened in 2016, but there's still that process of once information gets out and can be used in a timed and systematic way. From a social media perspective, like there really is an amplifier effect that is quite a bit different, and it gets more into disinformation campaigns than actually targeted hacking.
Now, Shannon, some of the details of the Russian interference was among what was redacted from the Mueller report. Do we have any more indication about what could be under those black lines and whether or not the public will ever see it?
I certainly don't have any indication of what's under the black lines. Now, Congress is seeking to get more of those redactions lifted, to try and seek some of that unredacted information. And the president last week gave the attorney general authority to declassify certain information around this investigation and use his discretion. So it's possible we could see more. But the reason it was probably redacted in the first place is because there was a long conversation about how it could compromise intelligence sources and methods. And those arguments will probably still be in place, whether it's Congress or the president who wants to make that information public. So I think there is still a lot that we're just not going to know about this. And it's a reminder that really this Mueller report only gives us a small window into all of the information that the intelligence community has collected. This is not all the information that Robert Mueller has that's in his report. That is essentially a summary of it. And we're only really kind of seeing a few pieces of the puzzle.
Jason, I want to ask your opinion on what you think the responsibility of some of these tech companies should be, whether it's Facebook or Twitter or YouTube. For example, there's this doctored video of Nancy Pelosi that's been floating around, which YouTube took down. Facebook has not taken it down. Facebook has flagged the video. Instead, do you think that these companies are doing enough to stop misinformation, if that's what you would call this particular video? And if not, are you concerned that they won't necessarily make some of the tough choices that might be needed to prevent this kind of interference from happening again?
So I think in this particular situation right now, Facebook is claiming satire in terms of like why they didn't bring it down. I do think the social media platforms actually do have a greater responsibility. They, rightly or wrongly, are the amplification platform of communicating information to the masses, both in the US as well as kind of most of the Western world. What they're doing right now is clearly not enough. What level they need to go to is honestly not a simple and easy question. Like, there are legitimate arguments around protection of satire for reasons of protecting free speech. With that said, like, clearly we can do better than we're doing right now. And having platforms that amplify the message of national adversaries is not in the goodwill or objective of any of us.
Shannon, the president tweeted today, nothing changes from the Mueller report. There was insufficient evidence, and therefore, in our country, a person is innocent. The case is closed. Exclamation point. Thank you. What happens next? This is certainly not the last we're going to be hearing about the Mueller report.
Well, I think to some extent the ball is in Democrats' court now as to how much further they want to pursue investigations into the president's time in office, if they want to begin formal impeachment hearings. So I think the Democrats, this is something that they have to figure out and solve sort of amongst themselves as a caucus, and Nancy Pelosi is probably going to be the key decision maker on that. From the White House perspective, I think now the White House has to be on the defense. They have to get, they're going to try and get control of the message. They're going to try and repeat this no collusion, let's move on, case closed, let's investigate the investigators. So those are the sort of talking points where they go from here, and try to sort of undercut this investigation by looking into the origins of the investigation, sort of create a side narrative here. And how it plays out politically for the president, whether the Democrats pursue impeachment or not, I think it's still unclear. Everyone looks back to what happened with Clinton and the Republicans, and the Republicans suffered big losses, and Clinton saw his popularity go up, during his impeachment. But remember, Republicans took the White House in the next election with George W. Bush. So I think, it's sort of all up in the air right now, and there's a lot of paths things could go down from here on out.
All right, lots to continue to report on. Bloomberg Shannon Petty's piece, and Jason Casey, CTO of Security Scorecard, thank you so much for weighing in. Well, Netflix is threatening to leave the state of Georgia if a new law restricting abortions takes effect. The streaming video service says it has many women working on productions in Georgia whose rights, along with millions of others, will be severely restricted by this law. Netflix produces several shows there, including Stranger Things and Ozark. The legislation is set to become law next year. Coming up, China's newest target, Beijing, gears up to use its dominance in the rare earths market to strike back in the escalating trade war with Washington. How this could affect U.S. tech next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. Now to the latest twist in the U.S.-China trade war. Could Beijing use its dominance of rare earths to hit back in its war with Washington? China supplies about 80% of U.S. imports of rare earths, which are used in products ranging from smartphones to electric cars and wind turbines. To discuss, we're joined by Bloomberg's metals reporter Justina Vasquez, and also with us in Washington, Bloomberg trade reporter Sarah McGregor. So Sarah, first of all, what sort of signals has China given thus far that this is a lever they might pull?
So China's been messaging quite a bit in state media. We had a visit by Chinese President Xi Jinping and his trade negotiator to a rare earth production facility. And it's been saying, you know, we're going to use any leverage that we have, including our dominance in rare earths, to try and gain some leverage in the trade talks. It's no surprise that China's going to look at everything that it has available that the U.S. really wants and try and hold that over them as they try and reach a trade deal.
So, Justina, talk to us about what rare earths are and how important they are to U.S. businesses and U.S. technology in particular.
Yeah, so rare earths, they're minerals. They're a large group of minerals, 17 of them, and they're used in things like LED screens on your iPhone. They're used in electric vehicles, wind turbines, and part of the issue here is that a lot of them can only be found in certain places like China, or largely found in certain places like China. And being one of the largest exporters of this good kind of throughout the world, along with, to a much smaller degree, places in Europe, for example, have comparatively just small percentages of exports that they end up producing and supplying to some of the manufacturers.
I've got a chart here in the Bloomberg which actually gives us a picture of the exports of rare earths from China to the United States. Sarah, you know, talk to us about where we are now. You know, this could be one option. What else?
So, yeah, the U.S. and China have really been ramping up their rhetoric against each other, and sort of, you know, since the talks basically collapsed a couple of weeks ago. And so we're looking ahead right now to a potential meeting between Chinese President Xi Jinping and Trump at the G20 at the end of June. But we're sort of at a standstill right now, and during this sort of gray area, the two sides are ramping up pressure on each other. These tariffs, the increase in tariffs will take effect on June 1st, going from 10% to 25% on $200 billion of Chinese goods. Trump has threatened to hit virtually every other import from the Asian nation. And so in this period right now, it looks like each side's trying to gain as much leverage as possible. This rare earths threat is yet among many other options that China has. You know, there's often talk about whether it would use its treasury holdings, over $1 billion of U.S. treasury holdings, and start to deplete those to show that it's to show its might. You know, and there's often other things like consumer boycotts or increased regulations that make it harder for U.S. companies to work in China that Beijing has been known to use before.
Right, and there's been this discussion of a potential boycott of the iPhone, but there's no evidence that such a thing might happen. So, Justina, we've talked about the importance of rare earths from a product level, but what about from a company level? I mean, which are the companies that could suffer the most if rare earths are cut off? Are we talking about Apple? Are we talking about Tesla?
Sure. So we know of one U.S. company, MP Materials, that exists here in the U.S. that mines rare earths. They're potentially affected. I know their CEO said to one of my colleagues not too long ago that it feels like a tariff on them specifically. There are other companies based here in North America that may not feel such an effect, such as large an effect, mainly because they are producing elsewhere and not actually exporting either the raw rare earth materials or products that they produce from them, not actually exporting them to the U.S., but rather to facilities elsewhere around the globe. So it kind of, it varies.
So, Sarah, of course, we know that the U.S. has already cut China off from, or Huawei off from U.S. supplies of chips and other technology, even though officials have repeatedly said Huawei has nothing to do with the trade war. But if such a thing happened, if China cut off rare earths to the United States, how might we respond?
So I think this is why it's a pretty scary time right now in the U.S.-China trade talks. You know, let's say we take the Huawei example, the U.S. blacklisting it, cutting it off from these American suppliers. China said it's going to retaliate. It hasn't said how. And so a threat like, you know, restricting or completely cutting off U.S. access to rare earths, for instance, is a really, it's just scary. It's something that could potentially happen. No one knows exactly how China's going to retaliate. And this prospect of this could really hit the U.S. economy. It could hit companies. And so, you know, I think if China is at least trying to send a message here, it's being sent loud and clear.
All right, Bloomberg, Sarah McGregor and Justina Vasquez, thank you both. Lots more to continue to follow. Sticking with U.S.-China trade tension, speculation continues that Apple could be hit at its core. As I mentioned, the tech giant could see its earnings fall 26% if China bans sales of the iPhone. Cowen says an iPhone ban represents an extreme case scenario for how the trade war could play out. Chris Sanker, senior research analyst at Cowen, spoke to Bloomberg earlier today.
We saw a similar trend, I would say, back in January. Right after the Huawei CFO arrest, there was a little bit of a nationalistic feeling where most Chinese were buying Huawei phones at the expense of iPhones. That situation actually reverted a little bit in February when Apple started giving a nice pricing discount during the Chinese New Year. And then we saw in the last earnings call in Apple, like Tim Cook mentioned how China was strong. We believe a lot of it was driven by February, March sales of iPhones and also services from the gaming side from the Chinese folks. So I think there's definitely a cause of concern. This is something that most investors ask. The reality is that we don't know the real outcome, but everyone can speculate on it. So that's what we did, like trying to lay out a scenario from fight to all the way down to 100% demand destruction.
Krish, we have seen Apple's stock come off already sharply. How much of that is supply chain concerns that are already a problem because of the tariffs that are in place now?
Yeah, I would say that there are two main reasons probably the stock is down. One definitely was the tariff, the 25% tariff, which by default increases the cost for Apple, even if they don't pass on the price to the end consumer. That is number one. And then the second one was concerns around demand destruction in China. So I would probably say both of them are a big factor in the price drop. And a lot of that really happened after the last earnings call, and the stock peaked out around a little over $210, $211 after the last earnings. And then you started seeing a lot of the negative news come. So right now, I would probably say a lot of the stock reaction has been tariff and China demand, which is a function of politics rather than true fundamentals at this point.
Can it be offset, the sales decline that we could potentially see in China? Can that be offset by other countries, say India?
It's a good question and something that investors have been asking. The reality is that a lot of the sales in China and India have been driven by price concessions and kind of like Apple's novel way of approaching it. So from that vantage point, you could argue that they could see incremental sales in India, wherever it is. But the reality is that at the end of the day, even in the last couple of quarters, what you've seen is right now it's not a supply constrained business. Last year they did over 200 million units of iPhone. They say they're going to do lower than that. So if it was more supply constrained, you could argue that they could reallocate the iPhones from one geography to another. But if it's more demand related, then it's a real challenge.
Obviously, we pay attention to the iPhone, Krish, because it's such a massive part of Apple's business at the moment. But as we've noted before, other fast-growing places are actually pretty sizable and maybe not as dependent on the consumer market of China. Is that maybe a strength for Apple, that it can continue to steal market share in places like the U.S.?
Yes, it is. I would probably say, to your point, there are certain other, the wearables is growing pretty nicely. iPad has been holding up. And then, the services is a long-term growth story. But the reality is that, over the next 6 to 9 or 12 months, the iPhone will still play a fact in the Apple thesis. Keep in mind, the iPhone was introduced in 2007. So for the last 10, 12 years, this has been an iPhone story. And now it's slowly transitioning away from iPhone. But things like that don't happen overnight. So I would probably say the iPhone headwind is still a near-term headwind for the stock.
Cowen analyst Chris Sanker there. Well, breaking news in telecom now. Bloomberg is reporting the U.S. Justice Department wants T-Mobile and Sprint to lay the groundwork for a new wireless carrier with its own network as a condition to clearing their $26.5 billion merger. This, according to a person familiar with the matter. Yes, if a merger happens, they want T-Mobile and Sprint to also create a fourth competitor. Unclear exactly how this would work, but both companies and the DOJ declined to comment on this story. T-Mobile shares slightly up there, Sprint shares unchanged. We'll keep you posted. This is Bloomberg. Sundar Pichai was for years one of the world's highest paid corporate executives. Now he's facing the opposite reality, no big paychecks at all. The Google CEO hasn't received an equity award in more than 2 years. A key reason is that Pichai turned down a big new grant of restricted stock in 2018 because he felt he was already paid generously. It's unclear how much he passed up, but another giant payday could have sparked a new round of controversy for Google, and I think we can assume he's doing just fine. PIMCO, meantime, has always been headquartered in Newport Beach, California, with an office in New York, but recently just opened a new outpost in Austin, Texas. Earlier today, Bloomberg's Jonathan Farrow spoke exclusively to PIMCO CEO Manny Roman alongside CIO Dan Ivasine on the strategic move to hire more tech talent.
We thought, I think Dan and I and our executive committee thought that we needed an office to be able to hire talent in technology. And I think it's fair to say that when it comes to hire tech people, we compete against other financial companies, but we also compete against big tech company and also startup. And we looked at 6 different locations and concluded that Austin, given the university, was the best place for us over the next 20 years to hire a significant amount of talent in technology. And then we're going to move, some small part of the businesses which makes sense to be in Texas. And so that was quite attractive, and we did a quite in-depth study, and so far we have about 100 people down there.
You've been expanding. You've expanded into municipals as well. What's left? Any gaps here at PIMCO that you're looking to fill? Any holes that you'd like to fill over the next coming years?
I think the main thing is not so much what you need to fill, is whether you know something about it and how you're going to grow it. And I think we are of the view that we want to grow organically, and that from time to time there may be small things we can do and bring to the PIMCO organization, but by large, it's hiring people, and it's make sure that we understand what we're good at and what we're not good at. And there's a lot of introspection which comes into this and making sure that we do that well.
That was PIMCO's Manny Roman along with Dan Ivasine, speaking exclusively with Bloomberg. Coming up, Andreessen Horowitz recently raised $2.75 billion for 2 new funds. We'll sit down with managing partner Scott Cooper to discuss the future of the firm and his new book, The Secrets of Sand Hill Road. That's next. This is Bloomberg. Technology. I'm Emily Chang in San Francisco. My next guest has become one of the most influential figures at a venture capital powerhouse in Silicon Valley. Scott Cooper, managing partner at Andreessen Horowitz, a firm that started shaking up Silicon Valley after its founding in 2009. It's since invested in a host of companies, Lyft, Airbnb, Coinbase, Facebook, Line, Slack, and more. And now Cooper is out with a new book, The Secrets of Sand Hill Road, Venture Capital and How to Get It. And he joins us now here in the studio. Scott, good to have you.
Thanks for having me here.
So Sand Hill Road, the proverbial Sand Hill Road, doesn't necessarily exist anymore. I mean, venture capital is sort of everywhere in San Francisco, across the country, around the world. And Andreessen Horowitz is one of the firms that really sort of disrupted the traditional model. How would you describe the state of VC today?
I think it's very good in the sense that, as you know, there's a tremendous amount of capital. It's probably easier than ever to get seed capital in particular. And at the same time, you've got this funny dynamic, which is companies are staying private longer. So you've got a huge amount of seed capital and then an enormous amount of capital going into these later rounds. I think last year, something like 70% of the dollars that were invested went into rounds that were $100 million or greater. So in that respect, I think it's actually a very healthy and a good place to be.
Now, in many ways, venture capital, though it's investing in disruptors for a long time was never disrupted itself. And now you see venture capital firms trying to reinvent themselves as you see this competition from angel investors and hedge funds and private equity firms, crowdfunding, SoftBank. How do you see the sort of traditional model being disrupted in the future? Like, can the way that VC exists today exist in the future?
Yeah, I think you're right. If you look at the first 35, 40 years, you're exactly right. Despite being an innovative industry, it was probably the most staid industry ever. I think the big thing that happened over the last 10 years is we've had this whole new introduction of seed firms, and it's hard to underestimate how much that changed the competitive dynamic, because you now have a whole new set of investors that are kind of coming into play before the traditional venture capital firms. And I think what it's done is it's forced the traditional venture capital firms to figure out what other than money can we provide, right? So money is no longer scarce. It's no longer a differentiator. So there's got to be something else.
So are you worried about a SoftBank that comes in with $100 billion?
Yeah, it's interesting. SoftBank was a party of one a couple of years ago. Now it turns out there's lots of other people playing in that space, right? We've got sovereign wealth funds. We've got private equity firms. So I don't worry about that at all. I think what the industry has to worry about is you have to do something other than provide capital, right? Capital is no longer, a scarce resource. It's basically a commodity. So I think for venture to survive, it has to continue to evolve and figure out what other than capital can it offer entrepreneurs.
So how does Andreessen Horowitz continue to differentiate itself? I know you've raised a couple of new funds, but how do you continue to be a disruptor and not be one of the disrupted?
Yeah, so we've done a couple of things. One is, as you probably know, we've got about 160 people today, and 100 of them work with our companies post-investment. So we've made a big investment there. We're going to continue to do that, everything from marketing to sales to business development opportunities. And then, look, we have to think about also being able to invest across the life cycle for companies. So one of the new funds we raised was a later stage fund to allow us to have, more emphasis on these companies as they go through, later and larger financing cycles.
Now, I know you're one of the investors that actually looks across the pipeline from the early stage to the public markets. We're in the middle of a lot of volatility, a trade war. We've seen a lot of tech companies going public, some to mixed results. Obviously you were an investor in Lyft, which just went public. You've got potentially Airbnb and Slack coming soon. Are you concerned for your companies about exiting now?
Yeah, I think the IPO market is actually healthy, believe it or not. So you're right, which is we've seen some companies that, of course, haven't performed as well as we would like. But for the most part, if you talk to institutional investors, if you talk to a BlackRock or Fidelity or T. Rowe, I think what they'll tell you is there's a scarcity of growth in the public markets, and where you can find growth that's reasonable and doesn't have kind of too much cash consumption, there's a lot of demand still for that. And so even though you see some companies haven't done well, a lot of the software companies in particular have done extremely well in the markets, and we think that really reflects kind of where the core demand is.
I was interviewing Dara Khosrowshahi, the CEO of Uber, on the day of the Uber IPO, which is also the day that the trade war ramped up.
Yeah.
Are you advising companies to just stay on their current path, or are you saying, take a look at the environment, maybe now is not a good time?
Look, I think you always have to take a look at the environment, but I think, as I said, I think the fundamental demand for IPOs and for growth-related stocks are there. So if companies are ready and they feel like they can perform to the expectations that are required in the public markets, I think this is a perfectly fine time for them to go. That being said, as you've seen, right, it's certainly the case that there is more of a preference for software-based companies that have better line of sight to visibility, even if they're growing at slightly lower rates than potentially others. And so I think people have to be mindful about cash consumption and making sure that they understand what the street's looking for there.
There's discussion that we're already in the midst of a tech Cold War with China. Would you agree?
I don't think we're in a Cold War right now, but I think it's certainly, there's lots of stuff that's challenging right now. We were involved, as you may know, when I was at the National Venture Capital Association with the CFIUS language and the FIRMA bills. There's no question it's very hard right now for U.S. companies to be able to take non-U.S. capital in particular capital from China. And, we've been on record that, I don't think that's a good thing for the industry. Right now, I would say we're still in the early stages, and so the impact on the venture capital industry and entrepreneurship is still fairly muted. But I don't think it's good policy for us over the long term to have that.
Are you worried about U.S. competitiveness? Are you worried about?
I am. I mean, and we've talked about this as well, which is, look, I think capital is free-flowing and entrepreneurship is free-flowing. And as a country, we've been a beneficiary of being, a hub for venture capital activity. 20 years ago, 90% of venture capital was in the U.S. Today, it's about 50%. And, the pie has gotten bigger, and so everybody's grown along with that. But if we do things from a policy perspective that don't encourage entrepreneurship and make the U.S. a very attractive place, I don't think that's good for us.
There's been an increasing chorus of voices calling for big tech to be broken up. And obviously, Andreessen Horowitz has connections to Facebook. Facebook isn't the only company we're talking about. But Elizabeth Warren, Chris Hughes, co-founder of Facebook. Do you think there is something to this argument that some of these companies are too big? Facebook, Apple, Amazon, Alphabet?
I think it is definitely the case. It's interesting from a political perspective that there's a lot of activity there happening. And you see it both, as you said, in some of the people who are running for presidential elections. You also see it even in the administration, right? So the FTC is very active in these areas as well. I think the big thing that we need to take away from this is we've got to recognize that the impact of technology, is just felt in many ways that sometimes inside Silicon Valley we don't appreciate. And I think we, as an industry, have to do a better job of connecting with regulators and figuring out, can we have rational regulation that allows entrepreneurship to thrive, but also make sure that people feel like there's a level playing field.
So does that mean breaking up or not?
Yeah, I mean, I don't really have a position, quite frankly. I'll leave that to the regulators, who are probably better at that than I. But I do think it means that we have to do more than we have done historically. I think we've always, been lucky in the sense that kind of we've been able to live in our own little hermetically sealed bubble, not a financial bubble, but out here in the Valley. And I think the reality is just that these technologies are impacting people in different ways, and we've got to appreciate the greater responsibility that comes with that.
So where are we going to see Andreessen Horowitz putting this new money? You say you're looking at companies that are just hitting their escape velocity.
Yep. So we raised two funds. One is focused on early stage companies, which we've always done. The second will be what we call later stage venture. And so the idea is exactly that. So companies that might have 10, 20, $30 million in revenue, but they're still not thinking about going public in the near term. So you'll see us do things like we made a recent investment in a company called Carta, for example. You'll see us do things like that, where these companies have enough of the business model working, and now they need additional capital to go into new market or to expand their sales and marketing activity.
All right, so the secrets of Sand Hill Road, what are some of the top secrets that entrepreneurs, people who want VC, need to know, and how do we make sure that all different kinds of people, women, people of color, know these secrets as well? Well,
you hit on it, and that's exactly why we wanted to write the book. So there's no question that I think there's still too much information asymmetry in this business, and you've certainly talked about it in a lot of the work that you've done as well. And so my hope with the book is we open that up and we help people understand, how does the VC business work? What does it mean to be able to pitch VCs? How do you live with and work with VCs? And my hope is that encourages more entrepreneurship, not just in terms of different genders and different ethnicity, but also, quite frankly, geographic diversity in a way that we haven't seen before.
All right, Scott Cooper, managing partner, Andreessen Horowitz, out with a new book, The Secrets of Sand Hill Road. Check it out. Thank you so much.
Thanks for having me. Appreciate it.
All right, Alibaba is considering raising $20 billion through a second listing in Hong Kong after a record-breaking New York debut 5 years ago. The deal would mark a major victory for the Asian financial hub, which rewrote its stock market rules after failing to attract Alibaba in 2014. Bloomberg's Sophie Cameroudin caught up with Charles Lee, HKEX chief executive, in an exclusive interview to discuss.
I am happy if this report is indeed correct, that they're planning to come. But if they do come, it's not a surprise to us, because I have said, when you travel far, you come home. Everybody does that. But that doesn't mean that you give up your home, your new home. So I'm sure they're just going to come back and keep whatever they're doing in New York or in other places, and they will be coming back to Asia. They could be here, or they could be Shanghai, or they could be in Shenzhen. Shanghai has a new tech board. So we're very, very happy that they're coming back, and we'll be very happy for whatever decisions they may make.
The news around Alibaba's potential secondary listing here in Hong Kong that comes as the trade war is escalating between the U.S. and China. Are you assessing your strategy in light of this?
Obviously, this trade war is a global event. It's going to affect all of us in very, very deep ways. So nobody likes it. We're all almost like watching on the sidelines, praying that this divorce is not to take hold, and maybe there are ways to scale it back. But we'll have to see.
What messages are you hearing from potential issuers when it comes to maybe reviewing their IPO plans, be it here in Hong Kong or elsewhere?
Well, everybody is looking at this and asking the question, what does this impact me? How does this impact me? So this is not only about IPOs, it's about a company, about investment, about even somebody who just wants to start a business. This is the time to do it, and should I wait? So that sort of uncertainty that this created is very costly and to the entire economy. So I think the political leaders need to really take the responsibility, quickly define what is really you wanted. If you want A, we probably can agree. If you want B, it's probably hard, but probably we can work something out. But if you want something that fundamentally you know is unacceptable to the other side, then we're going through a divorce, and then we should go into a civil and peaceful and hopefully a process that ultimately allow everybody to get on with their lives.
And Charles, the biotech sector has been a key focus, part of the revamp with the stock market rules were focused in this space. You've seen several pre-revenue biotech firms come to Hong Kong. Then what kind of feedback are you getting regarding those reforms? What kind of changes might you see going forward? We
already had 10 listings and raising $35 billion. We're already the second largest biotech market globally, and we have another 10 in the pipelines. But the key here is that we are launching this very important chapter in a market where a huge population and is aging. And so this is the area that I see tremendous opportunity, but I'm also quite worried that there are also attempts to say that this U.S.-China conflict should also somehow spill over to this particular sector, which would be really ill-conceived, because unlike trade, manufacturing, technology, you could argue that if the rise of China could mean the decline of America in employment or in military security, national security, technology advancement. I'm not saying I agree with that, but I could see the reasonable argument. But in biotech, before you are American, before you are European, before you're Asian, we are humans. We all want one thing. We want to be healthy. We don't want to get sick. When we have a disease, we want to get that disease discovered and cured. So there's only one company and one enemy. There's no enemy between us. There's only one common enemy, disease.
That was Charles Lee, Hong Kong Exchange Chief Executive. Coming up, call it the dream of the Jetsons, but the Roomba cleaned up the messes of millions of customers. We will talk to the CEO behind the device about their new product lineup. This is Bloomberg. iRobot, the maker of Roomba vacuums, is releasing 2 new cleaning bots with new technology to help lighten the load at home. Colin Engel, CEO of iRobot, joins us now in New York. And Colin, these new bots can actually talk to each other, as I understand it. Tell us about them.
So the 2 new robots, the Roomba S9 and the BravoJet M6, are designed not just to raise the bar on vacuuming and mopping, but also to collaborate as a first step in a home where your devices are actually working together to a better result. So the S9, the new vacuum, is a beast. It is 40 times more powerful. It goes into corners very aggressively to get all of the dirt, and it's designed so that it can actually pick up allergens and pollens, trap them, so 99% of everything that's picked up is captured. And then the BravoJet M6, well, that's our new mopping robot. And both of these robots build maps, so they understand what the kitchen is, they understand what the living room is. And for the BravoJet M6, that's really important because different rooms may have different surfaces, and you want to use maybe dry mopping, damp mopping, or wet mopping, depending on what type of flooring it is. But then this collaboration happens, imagine your mudroom, which can have just a lot of caked in dirt and mud, and you want to vacuum that up first before you before you mop.
Now, Roomba has obviously a fervent following, but you also have folks out there who say, these just don't work for my space. Shares did drop after you reported first quarter results on a sort of softer second quarter outlook. What's your response to some of the skepticism out there?
So we've always had people who didn't yet understand or this was a too good to be true. Today, 25% of all money spent on vacuum cleaners is now spent on robot vacuum cleaners. And for the second year in the row, the Roomba was the #1 selling vacuum cleaner in America. And so this is a real disruption and changing of how people are going to care for their home, and now we're extending from vacuuming into mopping, and later this year we'll be mowing your lawn too.
Now, Asia is a big part of your business. As I understand it, 20% of your sales come from China. How is the trade war affecting you?
So Asia is about 20% of our sales, Japan being the largest. But the trade war is more impactful because of the tariffs. Our products are subject to 25% tariffs, and despite the fact that the consumer robot industry grew last year 35%, these increases in price, which are reflected in increased prices of our products, certainly are having a slowdown impact on that meteoric growth in the marketplace.
All right, 20% of your sales come from Asia. We'll continue to follow. Colin Engel, iRobot CEO and co-founder, thanks so much. Still ahead, it is Uber's biggest test since going public earlier this month. We'll discuss what to expect as the ride-hailing giant reports its first earnings results as a public company. This is Bloomberg. Amazon is now updating its Alexa voice software to let users delete recordings of their voice using a spoken command like Alexa. Delete everything I said today. This move follows criticism of the company's privacy practices related to its digital assistant. Bloomberg previously reported an Amazon team listens to voice recordings as part of an effort to improve the software. Well, Uber, the biggest IPO of the year, has started out on a weak foot. Concerns have ranged from the size of the ride-hailing market to the company's ability to push into self-driving cars to investors' appetite for riskier assets in a worsening U.S.-China trade dispute. Shares have fallen 9% from their $45 offering price, closing today around $39. We will get new insights into the company after it reports earnings results Thursday. Here with the preview, Bloomberg Tech's Eric Newcomer. So, Eric, we know some of the numbers because they came out in the IPO prospectus. So what are the new pieces of information we're looking to learn here?
I mean, we actually know a lot here because they gave ranges around Q1. So it's sort of a question, okay, in the range of $3 billion in revenue for the quarter, but where exactly does it fall? In the range of $1 billion loss for the quarter. So it's going to be a lot of the sort of fine tuning on those numbers, and then any sort of ancillary numbers they provide, and then of course the call will be an opportunity for Dara Khosrowshahi and probably his CFO Nelson Che to talk about the company and explain sort of where the vision is.
You and I spoke with Dara on the floor of the New York Stock Exchange when the company went public. Take a listen to what he had to say then about profitability.
Profitability is a very significant priority for us. Listen, the great companies of the world can grow, but they can grow off of a base of their internal capital, so to speak, and that is absolutely a goal for us. We don't want to be dependent on public markets for capital. This was important. This was a very important capital raise for us, but believe me, we believe that our business can and should be profitable over time.
That said, investors don't necessarily buy it, and I wonder what kind of color we're going to get like that about the numbers, about what's to come, given that the shares have continued to not perform well.
Well, I think the key question that people has is if Uber tries to cut its losses, what effect does that have on total addressable market? If prices are going up, does that limit the universe of people who will take an Uber? If drivers are getting paid less, does that reduce the workforce? And so I think people are really going to want to know how interconnected that is and try to watch, what happens as Uber tries, if they do try to cut into losses, what effect that has on sort of revenue growth and how much it's able to sustain revenue growth. So I think just knowing that all the pieces of the puzzle are interconnected, seeing how they fit together over time will be sort of necessary to understand this company.
And quickly, what are you hearing from inside the company about morale over the last few weeks?
You know, I think it's sort of happy to be out and public. You know, it was a huge milestone that the company had been oriented to for a long time. So I think for the most part, they're operating, but certainly people who had huge stakes in the company from the early days, you know, would like to see the value up because it has a massive impact on their net worth.
All right, well, I know you're going to be all over the results tomorrow. We'll have them as well. Our very own Eric Newcomer, thank you, as always. All right, the We Company, parent to the co-working company WeWork, is in talks with banks about arranging a credit line of almost $2.8 billion. Bloomberg has learned JP Morgan is leading the potential financing. The We Company is said to want the credit line in place before a planned IPO. And that does it for this edition of Bloomberg Technology. Remember, we are live streaming on Twitter. You can check us out at Technology, and be sure to follow our global breaking news network, TikTok, on Twitter. This is Bloomberg.